Congress has been buying war stocks in reaction to this new war we're seeing over in Israel. Super sad, obviously. In this video, though, I'm just going to focus on the stocks that are benefiting from this new war. Sad to see, obviously, but I'll kind of keep it moving. So many of them bought defense companies such as GD, General Dynamics. Numerous Republicans bought heavy into oil and energy companies with Exxon Mobil, Devon Energy, and Chevron being a few of those names. And then we can also see that there were some Democrats buying cybersecurity names like Fortnite. So we could see those buys here of the energy, and then GD also being bought a lot as well. So um, Michael McCall also was kind of the Democratic buyer of those Fortnite calls. So with that being said, though, I want to compare all of these, quote unquote, war stocks to each other and see if there are any opportunities in terms of valuation, revenue growth. We'll go through the balance sheet of each of these companies to see which is really a safe investment, right? So just to reiterate, these 5 stocks are General Dynamics, Exxon Mobil, Devon Energy, Chevron Energy, and Fortnite. Let's start it off with valuation here for these companies. So we can see that for GD, we have a 17 times PE, or excuse me, 18 times PE, meaning that for every $1 of earnings, investors are willing to pay $18. And then for ExxonMobil, that PE is at 8. For Devon Energy, it's at 5. For Chevron, it's at 10. And for Fortnite, it's at 45. Or excuse me, 44. So obviously the cybersecurity name is going to garner a higher multiple. That's pretty typical. But it is interesting to see that the best stock in terms of valuation is actually Devon Energy. So let's look at the growth and see why that is. So we can see that the 5-year compounded annual growth rate for General Dynamics is 4%, for ExxonMobil 7%, for Devon Energy 15%, Chevron 8%, FTNT is 25% compounded annual growth rate for the past 5 years. So not shocking to see that the cybersecurity name is growing faster than these other companies. But I thought it was interesting that Devon actually has the cheapest valuation and has grown the most over the past 5 years. I found that kind of questionable. But let's keep it moving and see kind of why that is. And then we can see that the profitability metrics actually look pretty good for Devon as well. So Devon Energy has 57% gross profit margin. If you don't know what gross profit margin is, it's just revenue minus cost of goods sold. It tells you what a company makes for what it sells. So General Dynamics at 16%, ExxonMobil at 34%, Chevron 40%, FTNT 76%. So the best gross profit margins within kind of the value names of this group is Devon Energy at 57%. And then FTNT obviously kind of blows the peers out of the water here with the 76% gross profit margin. And then let's take a look at the balance sheet for these companies. So I'll go left to right here. So for General Dynamics, we have $1.1 billion in cash. We also have $11 billion in debt, meaning that the company has $10.3 billion more cash, or actually more debt than they do cash. And then ExxonMobil, $29 million, actually $29 billion in cash, $41 billion in debt, $11 billion more debt than cash. And then Devon Energy, only $372 million in cash, so that could be weighing on the valuation a bit. And then we have $6.7 billion in debt, so $6.3 billion more debt than cash. And then for CVX here, $9.6 billion in cash, and then $21 billion in debt, so $11.9 billion more debt than cash. And then FTNT really has a beautiful balance sheet. So we have a $3.3 billion cash holding, and we have a $1 billion debt holding here. So debt, we have $2.2 billion more cash than we do debt. So that's the only company out of these peers that has more cash than debt. Obviously, the other companies are kind of in areas where in sectors that have higher capital structures, or they're just more capital intensive, rather, I should say. So that's not really crazy to see, but it is kind of interesting to see FTNT has such a good looking balance sheet. Definitely shouldn't be kind of glossed over there. And with that being said, though, so we went over all the valuations. I think Devon kind of looks the most interesting amongst the cheaper stocks here, and then FTNT obviously it's kind of tough to compare it to the peers, obviously just because it's such a different business, right? But Devon Energy really, to me, is the most interesting stock here in terms of valuation. But obviously, FTNT is really interesting as well because the cyberspace is so important these days, as especially AI comes around, right? So FTNT would really kind of be my top pick just based on the financials, given that balance sheet looks so good. But Devon Energy, out of the kind of value names here, I would like most, purely based on financials. And then with that being said, let's go through the price predictions for each of these stocks. So I have their charts pulled up. I'll give you a price prediction based on technical analysis, not factoring in any fundamental factors, any financials here, just purely talking technicals. So we saw this stock cross above all daily moving averages for the first time since December of last year, which to me signals that this stock has the most positive momentum that it's had really in almost a full year. So bullish momentum for this stock gives me somewhat of an upside bias. I think we could come up to resistance at around $260, which is where the stock had topped out in December. Therefore, I believe we top out around these levels once again. So just to kind of show you how it looks here, I think we could come up to this resistance level at 257 bucks roughly for this stock. So that's what I'm seeing for GD. Obviously, though, I do want to note here that the stock is roughly overbought according to RSI. So that could cause us somewhat of a headwind. We might see some sideways trading for the next couple days, but I think over the coming weeks to months, we'll see this stock continue on this uptrend and move up to 257 bucks. And then let's move into the oil names here. So ExxonMobil just came up to test resistance at around 112 bucks, which is where the stock had topped out in August of this year. And this resistance level coincides with the stock's 50-day moving average. Therefore, I believe we could see somewhat of a pullback from this DMA, and likely we could move back down to the 200-day moving average at around $109. But I do still think the bias is to the upside long term for the stock that's had very bullish momentum. We saw the 50-day moving average cross over the 200-day moving average on September 21st, which is called a golden cross and signals bullish momentum. So definitely positive momentum for the stock, thinking that we see somewhat of a rejection at around basically 112 here, and we could come down to 109 and sideways trade and then move higher. But before I kind of had a long-term bullish call for the stock, I would want to see the stock move over 112 and kind of hold that area. If we move over 112, then I would feel very confident that we likely get a move up to about $120, as this level is really the next major level of resistance for the stock. It's where the stock topped out in May of this year. It's also where the stock topped out in late September. So as long as we're able to move over that 112 level, I do see it as somewhat likely that we would see a larger move higher up to 120 bucks. And then let's talk about Devon Energy here. So Devon Energy unfortunately fell through support at around $46.30 in last week's trading session on Monday. But we're kind of hanging in there, and we're coming up to test this past support level, which becomes new resistance. So we could see some sideways trading for Devon here. But I do think over the long term, we'll see the stock reclaim this support level and come up to the 50-day moving average, which coincides with the 100-day moving average at around 50 bucks. So that's kind of what I'm seeing for Devin in the short term. Obviously, we talked about the financials. I thought the financials looked really good for Devin, especially when you compare it to the energy peers. So from a financial standpoint, if you're looking for a long-term hold, this might be it. But like I said, I'm kind of just talking purely about charts right now. And then let's talk about Chevron. So Chevron has actually held this 150-day moving average as it was tested in each of the past 3 trading days. So on Friday's trading session, on Thursdays, on Wednesday, they all those days we ended up testing this level and holding this 160 level, which is where the 150-day moving average lies currently. But honestly, I think we likely get a move higher now, up to about resistance at around $171, which is where the stock topped out in late September. It's also where the stock topped out in April. Not saying that we couldn't see a larger move higher for Chevron. It's just I'm just calling out a very, very clear resistance level within the chart. Now, if we were to see that broken, well, I think we would almost certainly get a larger move higher. How high? Well, I think we'd likely come up to this next major resistance level at around $187. So that would kind of be my price target for this stock, as long as we're able to confirm this breakout. So my shorter term price target is about $171. My longer term price target, if that's broken, is $187. And then Fortinet here, so held support at around $56. So we bottomed out at this level in August. We held this level. We bottomed out consistently at this level last week as well. And just to show you how significant this level is this is actually where shares had consistently topped out in 2022 in the fall. So past resistance acts as new support. We saw that here over the past couple weeks. So I do think this $57 level is a great level to be buying some Fortinet. But we're unfortunately below all daily moving averages, which signals bearish momentum. And speaking of bearish momentum, we had the 50-day moving average cross below the 200-day moving average on October 3rd, which signals a bearish momentum trade. That signal is actually called a death cross. Sounds like what it is. It's not good. So bearish momentum. We're below all daily moving averages. I don't love that. So what I think likely happens is we see somewhat of a rejection from this 62 to 61 level, and we get a move back down to support at around $57. Once we get that move back down to support around $57, I think that would be a really, really good buying zone for this stock. So talked about a lot, went through all of those charts. I hope you enjoyed this video. It was actually the first video I did with my camera on. So for those that have been subbed for like the past, over the past year or so, this is the first time I'm kind of seeing you here. So nice to meet you. Let me know what you think about this video in the comments. Appreciate you watching. Please leave a like and subscribe. Thanks.
Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.